Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening as we're here on Monday, the 3rd of June. It's hard to believe that. I can't believe how fast time goes. 2024, about 6:20 p.m. Central Time. So in the metal markets, a little bit of a lift tonight. Now, it's a funny day today because you're fighting a situation in the stock market where is bad news or is bad news still good news? It sounds crazy, but everybody's trying to figure out what the Fed's going to do. We have two central banks this week about to make interest rate decisions that we care about, European Central Bank and the Bank of Canada. Energy prices got smashed today. There's no other word. And, I pointed out to my subscribers that as I looked at it, doesn't mean I'm right, more production is coming on the market in terms of $750,000 a barrel, 750,000 barrels a day coming on at the end of October. So the market looked at that. Bonds and notes rallied a little bit off of some weakness we had in economic data. And this is a week of economic data. We're going to get all kinds of jobs numbers. We get ADP, JOLTS, and then we come up at the end of the week with the U.S. jobs report. And obviously, everybody's looking at that. I still am of the camp that if you're going to get an interest rate cut, it probably requires 2 to 3 months in a row of data to prove to the Fed what they've got, and I doubt it's still September. I think it's in the latter part of the last quarter of the year. So if we look at gold, it's hard to be anything but bullish when you look at a weekly chart of just closes. The market's still looking pretty good there. We see that the market is broken down. And you can see right here, it hasn't thrown out to me any new signals. You've got lower highs, lower lows. The resistance in the market is around the 2390 level, which is still a relatively high number for the gold market. But that's the resistance if you're going to rally, the 18-day average of closes. And the support's down here at 2322. Trend down, bias down. You can get a short covering rally, but I'd look for failures in this 2390 zone, or at least a pause. And you have an oversold market, which keeps me thinking that you're not going to see new money wanting to be deployed on the short side. In the gold-silver ratio, seems to be stalled out. Now, it'll be interesting what happens here. Normally, silver's weaker than gold going into June, July timeframe. So we'll see if that works out. As you can see, silver fell back for the first time to its 18-day average of closes, held it, but the trend is still down. In the copper market, a nice rally that we had today. I'll just come here and show you what I mean. And that is in large part up 1.4% because China's Caixin came out with numbers and they showed that the factories are producing more. But the problem has been the official numbers haven't matched up for 4 months with the Caixin. And that means which one is right to me. So not there yet. Oversold market, could get a bounce, could easily get back on good short covering to the 481 level, but still not looking yet like it's time to deploy money in this market at this point. In the platinum market, now the market is fighting to see what direction it can take. It's void of one. It's oversold. You have a higher high, lower low pattern. I don't know what you could do with that. And in the dollar, it's been coming under pressure. And this is interesting in the dollar. Will interest rate cuts in the Canadian and/or the European Central Bank be bullish or bearish for those currencies? At the beginning of the year, my thoughts and that of many analysts was, the U.S. is going to stay higher for longer. Those currencies, if they cut rates, it'll be down. The shifting in the thought process changed. Now it's saying, well, gee, the U.S. is stalling out. They're addressing their slowdown. They're going to spur on their economies. You want to own them and not own the dollar. That's all happened in 6 months. Is it going to hold up is the question. Right now, you're down to the initial support of the 100-day average, the Bollinger Band, and even maybe the 200-day, but that is the battle that is going on. So important to keep up with that. The data tomorrow. You're going to get the Red Book Group coming out with the U.S. retail sales at 755. They've been running over 6%. Wow, big power. U.S. factory orders come out Tuesday around 9 a.m. They're forecasting them up 0.7. Last month it was reported up 1.6%. Slow down. And that's what the Fed wants to see in order to start moving on rates. Then the all-important JOLTS number comes out. And you're going to get that, and that's going to come out at 9 o'clock. And they're going to, last month it said that the job openings were 8.488 million at the end of March. So that'll give you an idea. And what are the rates of people leaving? You're continue to see people are holding on to jobs longer. There aren't that many out there, and they're not paying any different than they were. So those days of getting big bumps in pay, that's over. API will come out at the end of the day with their stockpiles. So you want to put this all together, learn from us what we're doing. We'd love you to get our information from us at the Linn Group. Special reports, commodity reports, ideas on what interest rates are doing, stock indices, the top trades, and you want to get our price counts. They come out daily. How do you get all this? Go to iraepstein.com under free offers or move your cursor up here and give it a click. I'm Ira. You have yourself a great trading evening, and I'll catch you first thing in the morning. Take care.